Robschild, no investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing. Today is Thursday, January 2nd, 2025. Today's episode, first item on the agenda. Happy New Year, everyone. Hope you're all doing well. Second item on the agenda, initial jobless claims and continuing claims coming out low. The expected weekly initial jobless claims was 225,000, which is still not very high, but it came down even lower than that and lower than last week's reading at 211,000. Continued claims, which is another very important part of this report, looking at it from a charting perspective, spiked to the downside. Are people getting jobs en masse? Is this going to trend lower? We'll have to wait and see if we really see a trend change. As it stands, it looks to me like it's a dip. Maybe we'll go sideways from here, but it's certainly not spiking to the upside, which can give the stock market more legs. With this going on and the Santa Claus rally volume being lower, generally speaking, for the last 5 trading days of December and the first 2 trading days of January, which is actually today and tomorrow, Friday. The professionals, the big volume doesn't come in until the following Monday. You would think with the data coming out today, not showing any blow-ups in the jobs data, along with, the fact that the pros are home, and typically during this period, you have your retailers. What are they doing? They're usually, just buying in. They have their Christmas bonus. They're normally letting the market go up and up and up. That's why the Santa Claus rally averages a 1.3% return over those 5 days. And with both of these positive tailwinds for the stock market, stocks fell again today, along with the dollar ripping higher to the upside. And we'll go through those charts momentarily. Last thing on the agenda, the next real big economic data coming out will be on Friday of next week with the unemployment report. As always, this is the most important metric as to where we are in the macroeconomic environment. None of the daily reminders have changed. I added one little thing here that the initial jobless claims are still steady week by week. And until jobless claims are spiking, until unemployment is clearly just going up and up and up, we're not in the storm. We can see the storm is right in front of us, but we're not in it yet. And, we'll have to wait for those numbers to come out before the market can really, start taking a bearish turn. If you want to hear me read through the daily reminders, watch my most previous macro show. It's titled Friday the 13th and has a tornado in the crystal ball as the thumbnail. Also, no updates in the crystal ball readings. I also read through those on that show. One little change, as I've been saying, I recently opened a 1.5% portfolio position, short position on Bitcoin. There's a head and shoulders top itching to play out, and with the stock market rolling over and the more recent correlation between stocks and Bitcoin, the reward is, the next level of support is $75,000. So that's a 25% drop in the price that I'm expecting to come. And if I don't get it, it's okay. I'll be all right. As you can see, the SPX, the S&P 500, where everyone and their uncle and brother, we all see the same thing at the all-time high of the S&P 500, an unbelievably clear head and shoulders top, and the Santa rally started on this green candle here, obviously turning into a Santa Claus Valley, or Dally we might end up calling it. We're cracking through and testing some trend lines, and momentum is proving to the downside again during the Santa Claus rally. this is a warning bell to me. It reminds me of Groundhog Day when, it comes out to see its shadow, and it's seeing a shadow. That's kind of how I'm reading this for, this. It wouldn't be surprising to me at all if 2025 ended up being a bear market or even a very deep bear market. As it stands, by the way, the S&P 500, I'm pretty sure if you watch this show, you probably watch some other people's show. Obviously, the target on this Head and Shoulders top here, everybody is saying is around 5,600 level. So there's going to be a lot of buying here at the 5,600 level of professional traders. And, they'll have different expectations as to how far it can bounce from there. There are people saying that, and it's true, we're not completely falling apart yet. Initial jobless claims isn't spiking to the upside. We haven't been accelerating to the upside in unemployment yet. It hasn't happened. And so there is a chance for this, what I'm expecting, along with pretty much everyone else, is this Head and Shoulders to play out down to the 5,600 level. And then we're not really sure what's going on from there. Some people think that we might, make it to a double top kind of a situation, and it could, and it could go higher and it could go down from there. It's really unsure past the 5,600 level. The way I am playing it is if and when we get down to this 5,600 level, it's probably when I'll be taking off my shorts in Bitcoin, possibly semiconductors at that point. I might take off my short there, and it depends what's going on with my other positions if I shift anything around. But I'm not going to be buying the dip here. No, at least not of the S&P 500. There might be other opportunities that clearly open up at that point. Whenever you get a big collapse in all of stocks, like some things fall further than others, and then that can present some attractive opportunities. So yeah, see what happens. With the S&P 500 going down, the value of the dollar going up. This is a common occurrence. The dollar, I talked about this wedge building up and how it was most likely to break out to the upside, and we certainly are having a very big breakout to the upside. There's no other way to put it. Yeah. How high can the dollar go? And as I've said previously on the show too, the higher the dollar goes, the more pressure it puts on international debt, dollar denominated debt, and it can rock, the economy worldwide. So see what happens. Some professional traders I follow say that oil, we basically got to sort of a target here around the almost $74 level. This could be the end of the run up in oil. If it becomes clear that, especially the U.S. economy is like slowing down and things are falling apart, oil is going to collapse. And I am expecting that in the near future. We have some interesting divergences happening between the dollar, gold, silver, and copper, with the dollar ripping higher and gold going higher at the same time is a little odd. Again, with the retailers being more in charge of markets, maybe this is a little bit of a type of run to safety, even though I don't consider gold to be safe right now. I think it's overvalued. If you just look at where it is relative to any moving average, it's clearly overvalued. But it's seen as a place to safety, especially after we had sort of a runaway inflation situation. People are still scared of inflation, and so some people are still buying gold. Interestingly, silver also getting a bit of a bid, but in copper, we don't see such strength. In fact, today's candle looks more, this is very obvious. This is a bear flag setting up. Red candle and a little candle at the bottom. So it's like struggling to find buyers here, which means it's more likely to continue to the downside. Again, this is after completing a head and shoulders top on copper, successfully retesting the line, getting strongly rejected, confirming below all of this mess here. It's pretty clear that Dr. Copper is expecting a slowdown here. And remember, folks, he has a PhD in economics, Dr. Copper. Another telltale sign that things might be headed lower, the Russell 2000, this was the Santa Claus rally chance. Everyone was saying, oh yeah, remember the Russell 2000 has been lagging behind the S&P 500, and so might be the best place to be. It hasn't proven to be that way lately. In fact, after last Wednesday's red candle, it's pretty clear that we have a bear flag situation going on right here. This is not looking strong at all. It's looking weak. It looks like it wants to break down. Interestingly, Bitcoin has been getting a bid. I thought for sure when we had cracked on Monday this previous trend line that it was enough to get the market scared enough to sell it down. But it looks like the head and shoulders top isn't done playing out yet. I am still holding my short position on Bitcoin. The reward to me is worth the risk at this point. The interesting thing about specifically today's market action is the correlation between, I'm going to say, gold and Bitcoin both getting a bid here. Again, it speaks to the fear of inflation in the US dollar, probably more than anything else. Even though, the 10-year break inflation rate is not showing inflation being priced higher. We've been going flat still. We're sitting right now at 2.34%. Last chart of the day, K-Web. I didn't expect to break below this line. I thought it was solid enough. So, yeah, not sure where it's headed. All I do know is that, these companies are worth more than their current price. And unless you think China is not going to exist in 10 years, I mean, with such a discrepancy between the valuations of U.S. stocks and Chinese equities, it's like, it just seems like such an obviously good place to be invested. If you're going to be invested in stocks, might as well, my philosophy on it is might as well own something that looks clearly cheap, something that has, that's overdone it in the fear category, which I think it has. And yeah, and that's all for me and my crystal ball. Happy New Year's again to everyone. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.